How much conviction do you have in your decisions? Because in the past I didn't, and that stopped me from being able to gain a lot of value. Let me explain. Before we continue though, let me mention first that this is not financial advice in any kind of form, and on top of that, this concept might be a very bad idea. It's way better to be able to invest in a diversified way so your risk is not too concentrated. You know the saying, don't put all of your eggs in one basket, but at the same time it's also bad to have 1000 baskets, or even worse, to keep moving from basket to basket because you can't trust your decisions. Also, for most people, it's a way better idea to invest in ETFs because those are diversified and also you don't have to do your own research. But if you want to invest in individual stocks and make your own picks, let me tell you a bit about my story and how the concept for this video came to be. Back in 2020, I held in my portfolio, among other names, two specific stocks that you might be familiar with. One was Nvidia and one was Palantir. And for both of those companies, I knew how much potential they had because I knew the landscape, but also I was working with AI back then. Now, I did hold on to them for quite a while, and then eventually I sold at a nice 3 to 4x profit, which was amazing. But had I waited even longer, that profit would have been so much bigger. That's actually what happened to one of my friends that after listening to me talk about Palantir for days on end, he decided to also invest, and he forgot about that decision until last year when he finally sold at like a 10x profit or something like that. Now, of course, he was only able to do that because one, he forgot about it, and two, he didn't know how much the company has grown in the meantime. Because most people normally when they see such a huge upside, they will decide to cash out. And that's the basis of this video. In what company do I have such strong conviction in that they have the opportunity to grow a lot in the upcoming 10 years that I wouldn't mind having this restriction that I can only invest in them. Also, this kind of implies that I won't be able to sell because then it defeats the entire purpose of this exercise. And also I want to show you my process of selecting this company because 10 years is quite a long time, so it's important to have a robust process that will ensure that you're not making a mistake. And once again, this is not financial advice, it's just an example of how you can maybe build your own due diligence process in order to find the stocks that you believe in. Now let's go through some rules. First of all, I want something that has enough upside potential to offset the associated risk. That balance is called asymmetric risk. It doesn't mean that there shouldn't be any risk, it means that the upside has to be so much bigger than the potential downside. There's always the chance that a company can go bankrupt, and that's why normally you need to diversify. But if you have this kind of restriction that we're talking about today, then it changes the equation to finding a company that has enough underlying assets where even if it goes bankrupt, you can at least recover a portion of your investment. Now, the value of most assets is hard to establish because they rely on demand, and stuff like IP is very vague about that, but the more, the better. Now, for this reason alone, I would not like to pick a software company because the assets and the IP that they have are very high level and shaky at best. Customers and employees can move to other competitors, and the software on its own, if it's easy to replicate, then the value is very shallow. On top of that, patents are very easy to bypass, so there's not that much underlying value there. For the same reason, biotech companies are out of the question because usually it's a binary decision of the risk because either you have an amazing asset that's worth billions of dollars or nothing because it doesn't get approved. On the other hand, medical companies that already have products that are approved and on the market don't pass the second rule, and that's the fact that the potential opportunity for growth needs to be big enough to outperform inflation, but also ideally to be the entire market. I'm looking for a company that can double, triple, 5x its valuation, not for something that grows at 5 to 10% per year that can be easily overcome by inflation. Approved products are already priced in, and it's very hard to determine if the market will continue to grow or not. And newer products fall under the first rule where there's too much risk. Due to the same upside rule, I would also not choose Nvidia or any of the Max 7s or hyperscalers, because most of the valuations are already very stretched at this point. Most of the people that want to own Nvidia already own it, so it's very hard for it to grow any more than that. The valuation might continue to grow. The company is also still growing and making record numbers, but I'm not sure if it can double or triple or 5x even in 10 years. Just think about it, it's already worth more than the entire GDP of all other countries except the US and China. There's not that much room for growth there. Also, it's pretty clear at this point that the AI bubble is kinda real, even if it will not crash the entire market 70%. Some companies will lose a lot of their valuations, and I'm not sure which ones will be able to recover in 10 years. Actually, if we think about that, most of the AI and AI related stocks are out, like semiconductors, memory, and so on. And that actually links very well with the next rule, that it needs to be something that has huge potential in the future as like the entire sector, not just that specific company. That's another thing to consider as a way to offset some risk, because if the entire sector will keep on growing, there's a high chance that the company will as well, even if it can't outperform its competitors. I'm curious by now if you're able to guess where I'm heading to. Like, let's use this as a checkpoint. Pause the video, leave a comment with what company or sector do you believe that I'm referring to, and let's see if you're correct by the end. Just like with AI, Web3, Metaverse, VR, that sector will be out of the question because it's already had its run up, and I don't think that the potential opportunity is there anymore. Another rule is that it needs to be a company and a sector that has bipartisan support. This is not going to get political. In contrary, it needs to be a company that's not affected by politics. That's why Palantir is out, because its success relies on the current political environment and the policies, and I don't want to be affected if those change. Even when I initially invested into Palantir after its direct listing, it didn't seem like the kind of company to be disinvolved in politics. If I knew, I would not have invested even back then, even with all of the potential upside. Now, this doesn't mean that a company that I want to invest into shouldn't have any government contracts, because those are very lucrative and they can be very beneficial for companies without ruining their image. The idea is that a company should not be that controversial. Another very important point, arguably the most important one, is that the leadership of the company should be very strong and have a history of delivering on their promise. That's something that I've learned from my experience investing into startups. Even if the product is amazing, like a golden goose, and the sector has a lot of potential, you still need a very strong team in order to take advantage of that opportunity. Nearly just as important, it needs to be a company that has very strong financials. That doesn't mean it needs to be profitable, because that reduces the potential upside, but it also shouldn't just throw money around wasting it on everything. Also, it needs to have high enough margins, and there should be enough demand for the products currently. That's why, for example, in the eyes of an investor, software, especially SaaS, was such a big opportunity, because it had huge profit margins, recurring revenue, up to the point where it didn't even matter that the companies were burning a lot of money. So something like that, but like I said previously, with more value associated with the assets. Just another mention, I'm not going to go into too many details, because I'm not trying to convince you to invest into my picks. I'm just giving you an example, so I won't touch on numbers and stuff like that. This is actually the rule that disqualifies the runner-up for this video that I'm going to talk about in a bit, but before that, there's one more rule to mention. This rule is not the most important one, but it's the one that has disqualified the most companies in the entire list, and it's the fact that I need to know the domain. This is a big part of my investing strategy, and it's what enabled me to find Nvidia and Palantir early on, because I come from a tech background, so it was easier for me to determine the impact that they will have on the entire landscape. Now, I don't have to work in that specific domain, like I wasn't working in the GPU hardware space before in order to find Nvidia. I found it through a hobby, through gaming. It needs to be a domain that I have some form of connection to, or that I've spent a lot of time researching about. It can be something like agriculture, where I have no idea what's happening inside. This disqualifies an entire sector that I'm very bullish on, and that's nuclear energy, specifically small nuclear reactors. While I believe they have huge potential, I can't invest into them because I don't really understand enough about them. I've seen a lot of people make the mistake of assuming that certain software companies are good from what they hear in the public, when in reality people from the domain know how bad they are, and I don't want to make the same kind of mistake. Now, I can't know insider information because that's illegal, but I can kind of make an informed decision from what's available to the public, as long as I know the entire sector. Now, those are the rules that I'm using in order to make this decision. You might have others, and it's good to have your own process. This is just mine and also my own results. Now, I did mention that I will talk about the runner-up, which is IonQ, which fits everything on this list except for the very strong financial metrics. I've worked on a quantum project in the past, and also I'm trying now to get certified in the domain. So I know a bit of what's happening inside, and also the company has a very strong leadership team. The opportunity is insanely big, and also the risk is a bit reduced because they have a lot of backing. IonQ is also not just like software, they own the hardware, they have patents, stuff like that, that's very valuable. The problem is that quantum computing is still very far away from being commercially viable, which increases the risk when it comes to finances. I don't think that they will go bankrupt anytime soon, but they will have to raise more money, which might affect the stock price, so yeah, that reduces my potential upside and I don't like that. I will continue to invest into it because I really believe in it, but it won't be my top choice when it comes to investing into one single stock. Maybe it would have a better case if we change the time frame to 20 to 30 years, then it would have more sense, but for 10 years, not really. And now finally, the company that I would be happy with if it was the only one that I could invest my money into for the next 10 years, it's Rocket Lab. First of all, despite the fact that a lot of people believe that the company is overvalued right now, especially after the recent run-up in price, I still believe that there's a lot of opportunity there. This is especially obvious if you compare their valuation with that of SpaceX. There's a lot more room for growth there, and also they haven't even tapped into a lot of other opportunities related to space. On top of that, the risk is reduced because they are in a growing sector, they have government contracts, and the assets that they own are quite valuable, like the production processes, the IP, and so on. The leadership team is very strong, they also have very good financials and a lot of profit margin, so most of the rules are already covered. There's only one that needs to be addressed, and that's the fact that I don't work in space. Now despite that, I've had experience with the domain in the past, and also I've researched a lot about it because first of all it's a passion, but also because I've had multiple opportunities to invest into startups that were building something in this area. Now, I've had to pass on to investing into those startups because of various reasons, but I've had one success with a company that I've invested in that was space related. Back when I first started investing, I also bought shares into a company called Virgin Galactic that was trying to build space travel, or at least suborbital space travel. Back then the company was doing quite well, and after researching a lot about the company and the tech that they've had, I decided to invest, and after they've managed to complete a flight, I managed to get out with a big profit. Now their business model was quite bad and nowadays they are not doing that good, but all of the research that I did back then inspired me to continue learning about the domain, and that's how I've learned about Rocket Lab. Now I didn't know about it back then, I've only found out about it 9 months ago, so I've missed some of the growth, but I did manage to capture the huge increase in price that happened recently. But I'm still not sure if I want to sell. I've already sold some of my position in order to diversify, but I'm not going to sell it completely. I'm only doing that because I have the option to diversify, but if I was restricted to only investing in one stock, this would be it and I would not sell. Thank you for watching, I hope that you've learned something about what to consider when making an investment. If you did, don't forget to leave a like and also subscribe if you want to see more content from me.